guys are ready to get out to a great start. For those of you who celebrate Thanksgiving, hope that you're preparing to have a great time with family and friends and loved ones, and hopefully you don't overdo it. But whatever it is, I hope that this week is going to be one of fulfillment, progress, and all that you hope and desire to be. Well, man, guess what? It is Monday morning, so it's Money Monday, and I've got something exciting I want to do. I try to do this periodically because I want to get people in the mindset of taking action and doing things. And so today, Money Monday, what we're going to do is, for those of you who always talk about being a business owner, I always talk about getting in business, I always talk about investing, I always talk about finding a way to make money. I want to give you an opportunity today for as little as $10. I'm not getting anything out of this outside of teaching you how to do this. For anywhere from $10 or less, you can buy a business, or at least a piece of one, that is a Fortune 500 company that is going to be producing. But before I do that, I'm going to teach you how to start something that you need to be doing for the long haul, and that is investing in compound growth. And I'm going to show you how easily it can be done on a device you use every day. Many of you have an app you use consistently throughout the month. But I'm going to give you some other options in case you don't. But if you have CashApp, you can literally buy stock. And if you can buy stock, then you can purchase shares in passively managed index funds that produce compound interest, like the S&P 500, Vanguard S&P 500, which I recommend everybody do. So what I'm going to do is I'm going to talk you through how to do it on Cash App, but I'm also going to give you some of the top brokers online, to where when you really get into it, you need to set up a brokerage account, connect your bank account, start really paying attention to what goes on. And I'm going to talk to you about some of the things you need to be aware of before you invest. But the top 10 are going to be Acorns, Betterment, Charles Schwab, E-Trade, Fundrise, Investor, M1 Finance, Public, Robinhood, and SoFi. I've dealt with all but a couple of those in some way, shape, form, or fashion, and they all have their ins and outs. Do your research. Know the biggest thing with investing, first and foremost, is to know your cost in fees and commissions, what you're going to be called, what you're going to be charged per transaction. And this is one of the things why I love Cash App. The transaction costs for doing this is good. Now, it's not a long-term strategy for a whole lot of investing, but to get you started, a few $1,000s up, up to a few $1,000s, you're going to be okay. Set up your taxes and everything you need to do on that. You can do that later. But basically, if you go to the home screen, you're going to have a top. It's going to say add cash, cash out. Then below that, you're going to have an opportunity for savings, Bitcoin, taxes, stocks. And if not, just go to your search icon, the little magnifying glass, and type in stocks. It'll pop up and you can save it as one of your panels on your home screen. When you tap it, you go to a different page. You tap stocks and you go to it, and then you can type in certain stocks. The first thing I want you to type in is S&P 500. And when you type in S&P 500, it pulls up. You can press it, and then it's going to take you over. It's going to show you what it's performing at today. Right now, it's doing pretty well. And then you can choose how much you're going to buy. And on Cash App, I think you can do as little as $1. And some of those others you can do as little as $1. All I want you to do is right now get used to investing, because the way that the wealthy get wealthy, the way that people who aren't wealthy become wealthy, is not by working extra jobs. It's not about sitting up and getting overtime. That may be the initial step to get the extra money you need to get started, but that will never get you to wealth. Anytime you're exchanging time for money, you can never develop wealth, because wealth, by its very definition, is the ability to live your lifestyle without having to show up to work. And the only way that you can do that is to actually give your money a job. That's right. Hire your money, put your money to work. And the way you do that is through multiple forms of income. And it's not just, you can invest in businesses this way. The reason that I always set people on this path is that when you set people on this path, It doesn't require business acumen to get into business. You just simply find the companies that are performing, find out why they're performing, find out how they're performing, and look at their long-term performance over time. And that gives you an insight into how they're going to do in up markets, down markets, bear, bull, whether we're in crisis or whether we're overperforming in our economy or the global economy is doing whatever. It will tell you the potential for this company to survive and recover, because the way that you really truly build wealth isn't in highly active trading, day trading, things of that nature, where you are constantly buying and selling, buying and selling. It's a good way to get, it's a quick way to get rich, but it's also the fastest way to go broke. What you're looking at is find viable stock in companies that have long-term success. And I'm going to give you the top performers that are a part of the Fortune 500 that are in the S&P 500, maybe the top 10. But I want you to buy at least a fraction of a share, whatever you have, $1, $10, $15, $20. And I want you to start paying attention to it. And when you see it fluctuating, just to say, well, I gained $2 today, or I gained 50 cents today, or I lost 50 cents today, start asking yourself why. Start doing the research, and you have the internet, and you also have AI now. So you have all these different ways to break down information and data and explain it to you. There's no time like right now to really truly learn how this stuff works and put it to work for you. So then what happens? You sit up and you say, okay, I gained this. What happened? What happened? And you're going to learn about geopolitical influences. You're going to learn about global interactions. And because of the way the world is set up now, borders really truly means are impacted in the way that you can move around the world. It's an exciting time. It can also be a very scary time. This is why you should be taking control of your financial future and not resting it in the hands of someone else. So even if you're going to keep your job, God bless you, keep your job, work your job, do your job to the best of your ability, but never rest solely on that, because you don't own it, you don't control it. And what I found is the people who thought they were playing it safe by having a job and not being on their own found out that at the time when they were least expecting it, they were handed pink slips. At the time they least expected it, their companies folded. I've shared this before. I just happened to be in the early 2000, late 1990s, early 2000s. I did what was called international relocation. I was an international relocation specialist. What I did is I expatriated and repatriated high-level executives for companies like Nortel, EDS, Unicare, Flora Daniels, Dresser Rand, Dresser Clark, and Enron. Matter of fact, I was the person who was responsible for repatriating all of the Enron executives when they had to return after the company collapsed. So I got to see what it was like for people who felt they were financially secure because they were working for one of the greatest companies on the planet, and they were set for life, only to find out that they were at ground zero and were going to have to somehow find out how to start over. There's no such thing as safe. What there is a thing called engagement and at least partial control. You're never going to have complete control because things are going to happen outside of your spectrum of control, but you do control how you respond. You do control how much you prepare for it. You do control your ability to navigate it. And that's what I want to get you involved and encouraged to do. But the first thing I want you to do is just go on your Cash App. If you don't have Cash App, go to one of these different things on the Acorn, Betterment, Charles Schwab, E-Trade. I've used E-Trade a lot in the past. Everybody likes Robinhood. There's been some stuff that happened with Robinhood, but Robinhood is something a lot of people like. I am really impressed with what I'm hearing about SoFi. Right now, it's ranked number 10 out of all the ones out. There's a bunch of them: Stash, Stockpile, TD Ameritrade, which is another good one. It's just not in the top 10. And like I said, you go, and basically what you want to do when you choose one of these brokerages is understand how they operate, understand their fees, their commissions, what they're going to charge you for transactional fees. Every time you make a trade, how much are you paying them? You want to know that. You want to know is there a benefit to leaving your money in their account as you invest and you get paid out dividends? Because in some of these, you do get dividends. And so, like, for instance, even on Cash App, like, say, for instance, I have Apple and Nike. Both of those pay dividends on I believe it's quarterly. So, any money earned during that time, it'll pay it out, or you can sit up and you can automate it to stay in or have it rediverted to, say, for instance, the S&P 500 for long-term growth. There are all these different things that you can do with this, but the first thing is simply to get involved with look. I showed you this before, the reason why I want you to get the S&P. Then I'm going to give you the top 10 companies that I think you should research, and then choose one of those companies today and put you at least $5 or $10 on it, and then pay attention to how it moves. Ask yourself questions, get involved, get engaged. And when you feel comfortable, start to add to what you've invested over time and get progressively more aggressive as you learn. Don't just go jump off into something because somebody told you something. I'm telling you S&P because that's solid. Everybody from Warren Buffett, whose company is number 7 in the top 10, Berkshire Hathaway, definitely get something in that. I'll tell you that. But what you want to do is you want to be aware of how things work so that you can move in and take action. But I told you about a case study I did. I did a 5-year case study about 7 years ago. And I took a $5 initial investment, put it in the S&P 500, which was doing roughly around 8.9 to 10% compounded interest annually. I put $5 initial investment, $4.65 or something like that every week for 5 years. It amounted to a total of $240 something that I put in totally over that 5-year period. And it generated $1,500 over 5 years. This is not get rich quick. This is to make sure at the end of it all, my family is my family is taken care of, and I'm setting up a future, and I'm teaching my family how to do this. It's the ability and the willingness to say, instead of going here to eat, instead of going on this trip, instead of doing this, I'm going to invest in the future of my family, and sitting up and knowing how to move. So in that little case study, it took 5 years, and I knew when I started, I said, this is what I'm going to do. I'm going to do it. And I just want to do something small, because the first thing people tell you is, I don't have the money to invest. If you don't have money to invest, you're the person that needs to be invested, because it's the only way you're going to build that type of economic foundation. I often tell the story of John Crowley and Theodore Johnson. John Crowley was a Black man who never made more than $12 an hour on his job. He worked as a parking lot attendant in the financial district. And what happened is, the people who parked in his parking lot were money managers, stockbrokers, and fund managers and all this. And he would just ask questions, and they would give him answers, and he would actually take action on that. And what happened is, when he retired from his parking lot attendant job, he was worth over $500,000, had paid off his house, had sent his 3 kids to college. And he was good. And then there's Theodore Johnson, who lived, a little bit before John, but he had a job at UPS way back in the day when, salaries were $13,000, $14,000 a year. And he never made more than $14,000 a year, but he knew someone who was independently wealthy. And he asked him what he should do. And he told him, he said, you need to take 20% of your income and invest it in a compound mechanism. You need to invest it in something that's growing and appreciating and producing some type of compound mechanism. And his initial response is, I can't afford to put in 20%. And the guy's response was, you can't afford not to. He says, if the government were to place a 20% tax increase on you, you would whine, complain, throw a hissy fit, but eventually you would sit up and just pay your taxes. You're programmed to do that. You need to program your mind to tax yourself so that your future is better than your present. And he did. When he retired, he never left UPS, just like John Crowley never left his parking lot job. He never left UPS, but when he retired, he was worth $72 million. By the time he reached age 90, he was worth close to $100 million, and he gave half of it away. Look him up, Theodore Johnson. and John Crowley. Look them up. You can see them, read those stories for yourself. These are people that came from nowhere. So what I want people to understand is you don't have to be rich to be rich. What you have to be is aware, educated, and willing to make some changes and take the approach. Now, there's no get rich quick. That's why Vegas stays pumping, because people are trying to get rich. This isn't about uneducated gambles. This is about taking calculated risk. This is about having a diversified plan across assets that will leverage one another and produce long-term success. When you get good enough at that diversity and that leveraging and that hedging, you will find that no matter what happens, you're going to be okay. And that's what the major players do. But you can start right now with as little as $5. Again, none of this is coming to me. I haven't given you anything that I own. This is about showing you a way to get yourself going. Now, if you want to learn more, you can go in the description box, and at the bottom, you can even enroll in the Path to Generational Wealth course, which is a comprehensive course. That course is 18 months. Took me 10 years of research and talking to the major players to be able to create it. You can enroll in that, or you can enroll in the 7-day online business launch course, which will teach you how to start creating revenue streams online. But what I want you to do today is go ahead, spend your dollar, your $5, $10, $20, $100, whatever you want to put on the S&P. I told you what I did with it. I put $5 initial investment, $4.60 something cents on the weekly investment for 5 years, with a total of 240 something bucks over 5 years. And it produced almost $1,500 in that 5-year period, just based on what the S&P does. That's what I was able to do in that case study. And just imagine if that would have been initial investment of 500 and a weekly investment of 40, 45, 50, 60, $100, what it would have been like. And you can play with the numbers. Go find your interest calculator online and play with the numbers. Play with the percentage amount. Play with the initial investment. Play with variations. It'll allow you to do all that. You can literally do this. But anyway, do that. Now, I'm going to give you some of the top performers in the Fortune 500 that you should research and pick one. Walmart is sitting at number 1. Amazon is sitting at number 2. ExxonMobil is sitting at number 3. Apple. And all these iPhone owners, which I am one of, you need to be invested in Apple. The money you guys spend on this for your kids and you, and these tablets and these phones, these watches and everything like that, you need to have stock in Apple. I'm a shoe person, so you need, and my kids, like, get you some stock. Tell my kids, get some stock in Nike. It's not in the top 10, but just think, if you're investing consistently in money and there's a company that's traded, look at how that company is performing and seeing if you can't reap at least some of the money you're putting into. Because here's the bottom line. If you're spending money into a company, the chance that you're going to buy stock in that company and it's going to pay you back at a rate more than what you're spending into it means you've really bought a lot of stock. But what you can do is create your own rebate system. So if I'm sitting up and I'm spending, let's say, $300 a month on Nikes, and I'm not, but I love shoes and I have a nice collection, but they were compiled over time. I get in my little feels, but that's not where I'm at now. But anyway, just say you do. You spend $300 a month. Say you go out and spend $1,000 on Nike stock. It's not going to pay you $300 a month. But what it will do is pay you a percentage every quarter of its gains, and it's doing pretty good now. What it means is you're going to get back some of the money that you're spending out there on the shoe because you're invested in the company. It's just a way of thinking. And that's how the wealthy think. It's always an angle financially and economically of what is my money doing. We tend to focus on what is my money getting. They tend to focus on what is my money producing. How is me buying this going to benefit me outside of emotion? So it goes from being consumer minded to investment minded. And the thing is, money's going out. The thing is, what is the money doing when it goes out is the question. So you have Walmart, Amazon, ExxonMobil, United Health Group, CVS Health, Berkshire Hathaway, General Motors, General Electric, Chevron, and you can just start that. But if you look, you can look up the top 10, top 20 of the Fortune 500 and look at how they perform, and also look at how their stocks perform, because um, you want to look at long-term performance. These companies all been around for a while. These companies are the show up and perform no matter what. Now, there are going to be times that things drop and go up, and this is the final piece of information that I'm going to give you today on this whole stock thing. I want you to first of all get the S&P, because that's your long game. No matter what, that you should always be putting into the S&P, and you should always be growing it, and you should never take out unless there's some emergency. Why? Because it pays compounded interest. What does that mean? It's not just paying interest on what you put in or what you gain. It's paying interest on the interest that's compounded. Every time something's added, now there's interest paid on that. So it compounds and expands and it balloons out over time. It's a beautiful thing. And the earlier that you get involved in it, the better it performs for you. So if you got young kids, you need to be teaching them this, because getting started at 20 is different than getting started at 40. Put it like this: you can get started at 20, go to 40, have a person that starts at 40 that goes to 60 and quit. Both put in what? 20 years of investing in it. But because this account was started earlier, this account has an additional 20 years after the investment phase of growth. That's the power of this thing. So again, do that. Then choose one of the 10 companies that I named. Walmart may not be your place to shop, but it's definitely performing. Walmart and Amazon are going at it to be the retail global juggernauts on this planet, and they trade back and forth. But right now, those two companies are solid, and I don't see anything changing long term. You know, there are going to be short-term fluctuations, but here is this last bit of information or advice that I want to give you. Buy solid and hold. What does that mean? You have not truly realized a loss in the stock market until you transact your sale. So for instance, if I buy stock at 100 and it goes up to 150 and I'm all excited, and then it drops to 100 and I'm getting kind of concerned, and it drops to 90 and I'm saying, wait a minute, what's happening? I've lost $10. Then it drops to 80 and I'm lost $20. It drops to 7. Now I'm starting to panic. Why? Because the price is dropping, and in my mind I'm losing money. No, the value of your asset is fluctuating. It happens in every freaking thing you do. What you want to do is trust that you made the right decision. Go back, research, do your work and your analytics and all that stuff to make sure there isn't anything that's going to have a long-term impact, and understand that the market fluctuates. The market is going to go up, it's going to balloon. A lot of times they're going to be inflated values in stocks, and that balloon will pop and it will create a drop in prices across the board. In some instances, it will be massive, and we will even call it a crisis, and it'll drop. This is actually when everybody comes in and buys up that has money. This is where crisis investors eat heavily. What I mean is, when I say you haven't lost, when that drops down to 70 and you start panicking, you still own the same percentage of that stock, or you still own the same amount of stock. Now, you don't realize the loss until you lock it in by selling it. Once you sell it, you've transacted it. You no longer own it. You no longer have access to its fluctuation. You only got what you transacted out. But if you hold it and you trust that the market is going to do what it's done for over 100 years, and that's correct itself, and all of the high-performing companies are going to rebound, and that stock value is going to go back up, guess what? It may recover fully, it may recover almost, it may recover and actually surpass the initial amount that you invested in it as for per stock cost. But I heard Ray Dalio, who happens to manage the largest hedge fund in the world. I think last I checked, it was $160-something billion hedge fund. Ray Dalio said that the stock market is the only place that something goes on sale and people panic. That's all that's happening when the stock prices and stock values drop, it's going on sale. What you should be doing is having a surplus that you can tap into, that you can buy more stock while it's on sale. Know the companies that are going to perform and know that they're going to rebound, and buy them while they're cheap. And if you got a company that you're already invested in and you truly have done your work and you believe in it and it drops, buy more stock. It sounds counterintuitive, but if you trust and believe that you've done your homework and this company over years has performed, if I got Berkshire Hathaway stock, if I got Walmart stock, if I got Amazon stock, what's another one in here, that Apple stock, and it drops significantly, unless there's something that's out there that says that the entire industry is shifting and being annihilated, anything in the medical industry like CVS Healthcare, and what was the other one? United Health Group. Get into insurance. Whatever you do, definitely get into insurance. That's why Berkshire Hathaway does so good. It's so heavily invested in insurance. Get into it. Why? They're going to always be there. They are the best crunchers of numbers. They have actuaries. That's all they do is crunch numbers to look at probabilities. And that's how they're able to insure and set premiums and all that other stuff. So you need to sit up and say, okay, when that stuff drops, I'm doubling down. I'm buying more, because eventually it's going to recover, and I'm going to, in some instances, increase my net worth in that short period of time, 20, 30, 40, sometimes even 50%. So these are the things that you need to learn. Pick up a book every day and read something about the financial world, whether you understand it or not. If you read something you don't understand it, research that. If you want a fast track, again, sign up for the course. You can sign up and pay in full, or you can sign up in installments. But whatever you do, you've got to start. This is what today is about, starting. Today, you should not go to sleep not owning a piece of a Fortune 500 company. I don't care if it's $3, $5, $10, $50. You need to own a piece of a Fortune 500 company. And then you need to follow the performance of the stock you purchased and ask the questions of why. Why is it doing this? Why does it do this? When does it do? What are how does it perform quarterly? You need to understand. And then you ask yourself, what influences different quarterly performances? Pay attention to the change in leaderships in companies, because change in leaderships is change in culture. Change in culture can have an impact on performance. You need to understand how things work. And as you gain an understanding or perspicacity in how things work, then you become progressively more aggressive in how you move. And I'm telling you, no, there is no guarantee. You will take losses over this, but when you do it properly and correctly, which we teach in the course, when you hedge with literally diversified investment, meaning that I'm not all in one industry, I'm not all in one company, I am diversified across the board, you're going to balance losses with wins. That's how you take care of it. That's how you win. That's how you go and you gain ground. You've got to learn this financial game. A lot of people, only this get people. No, you don't have access to the resources right now to play at their level, but you have access to the tools. When I say resources, I mean financial, money, but you have access to the tools. There's no thing says that you can't buy stock. There's no thing that says you can't invest in real estate. And if you can't afford to invest in real estate as an individual, create you a conglomerate group that collectively can invest and hold it, put it underneath a trust so that it is guarded in tax liability, and it is easily managed through the bylaws of that trust. Stop sitting up and thinking that you're locked down to only doing or having what someone else gives you. And I can tell you, no, it's not easy. But what I can tell you is it's rewarding, and that the long-term benefits of it far outweigh the short-term discomfort, the short-term uncertainty that you may feel. And the more you educate yourself, the more you become aware. But I promise you, taking ownership in something is the beginning of changing your life. So on that note, look, I'm gonna get ready to get out of here. Again, if you want to get started with training on a somewhat academic level, enroll in the course. I promise you, this is, again, this is in the get rich quick scheme. This isn't, I'm going to pick it up and read this. And in a week, I'm going to know. This is literally training in every element and component of what they do, from real estate to the stock market, to art, to insurance, to income annuities, and everything else in between. How to set your numbers, how to follow through, how to read financials, setting up trusts and everything else. It's all in there. But again, you've got to start somewhere. So on that note, look, I'm gonna get ready to get out of here. I have a client in 20 minutes at the top of the hour, so I need to get ready and get prepared for that. But I wanted to get this out of the way because this is going to be a power-packed week. So you guys stay tuned, but don't miss this opportunity to take action. I promise you, you will not regret it. So go to your Cash App and buy your first piece of stock. Or if you don't have Cash App, go to one of those ones I mentioned that you can get set up on in less than 10 or 15 minutes and start purchasing stock. Again, this is not willy-nilly. I gave you some stuff that has just simply performed and it's pretty safe. You don't have to worry about it. That S&P, ride that to death. On that note, look, I'm going to get ready to get out of here. You guys have an unbelievable remainder of your day, and I will talk to you soon. As I always say, I live my life on full so that when I leave this place, I die on E. I'm challenging you to take the same mindset. Life is not going to be easy. It's not going to always lay down for you. It's going to be times you're going to be wondering what in the hell is going on. But when you are committed to finishing, when you're committed to being at the top of your game, and giving life everything you have, you will come out of whatever you're going through, and you will come out better. You will come out stronger. You will come out advanced in your position. But you've got to be willing to be invested in being the best version of yourself each and every day. On that note, I'm out. You guys have an unbelievable remainder of your day. Take care.